Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris milling wheat and London UK feed wheat. I'll start with Paris milling wheat. The recent April to date based head and shoulders pattern was not so clear here as it was in Kansas City or even Minneapolis, but it was still there. The break below the neckline, currently 387 even, including a gapping move lower. The rising medium moving average, currently 364 even, did not stop the fall, but it did erode the bearish incentive enough that the task of stopping it was made easier by the 50% Fibonacci line for 2022 at 348 even. This hesitation carried on for just over a week, but then the market finally broke down through the 50% Fibonacci line. Now please remember that hesitation, as it will become part of a bear flag later on. Anyway, patterns carried on lower, reaching targets, the primary target for the head and shoulders top, continued lower. Prices even then reached the target for the mid-May to June bear flag pattern. This left two targets below. In the 299 area is the secondary and harder to get target X1 for the original head and shoulders top pattern. Then there is target X3 in the 308.75 area. This is a potential target for the mid-June to date action, being also a bear flag pattern. I told you this level would come up again soon. So what stands in the way? Well, in this case, I would refer to my commentary from 3 weeks ago at the start of July. And I quote, "I would say there is one possibly combined area to look for, and that is the combination, or individually as one is moving higher, of the rising long moving average, currently 323.25, and the 50% Fibonacci line of the March 2011 to May 2022 move at 314.75. I'd also throw in the mid-March low at 311.75, but I'm not sure of this last one." End of quote. Well, prices did try down there 2 weeks ago, but turned back upwards with a bullish harami that day, disguised as an indecisive spinning top, would you believe? This gapping move higher peaked on Monday last week as the market ran into the declining short moving average, currently 330.75, combined with the 50% Fibonacci line for 2022 at 348 even, causing a fall all the way back down to under the long moving average at the end of last week. Then again at the start of this week, prices tried higher, but this time were capped, I would say, at a lower level by the same short moving average, and gapped open lower today, punching down through the July low to make a new low and to test the 311.75 March low. That was previously mentioned. Thus, the market is once again approaching the target X3 in the 308.75 level. Now, we have two possibilities here. Firstly, a continuation lower, with the mid-June to date action being seen as a possible bear flag type move. Secondly, stabilization. Stabilization over the March low at 311.75 and the formation of a possible double bottom type action. Of these two, right now, the large bearish halfway hesitation pattern continues to seemingly be in front right now. London UK feed wheat. The March to June head and shoulders top is still visible here, if a little disjointed, as it has been in all the other grains. Now, this was by no means a good head and shoulders pattern. For starters, the left shoulder is small and the right shoulder, well, it could have used some bulking up. But it will do. Yeah, the pattern is still there, and I had previously pointed prospective targets below. The primary target has already been achieved, but we still have a live, harder to reach secondary target X1 in a 217 even area. Additionally, I previously mentioned 5 weeks ago, and I quote, "Finally, much as in the other grains, I've observed a possible bearish halfway hesitation from the May high to date. It makes up the second shoulder of the head and shoulders top and is really bad example of one here, but I'm using the knowledge from other grain markets to visualize it. Thus, we have a potential target X2 in the 242 even area as a possible target for this pattern. I'll be interested to see if the market makes it that far, as it is just below the 50% Fibonacci line of September 2019 to start of 2022 move at 245.10. Well, The market almost, end of quote, well, the market almost made it down there, stopping short of target X2, but closing below the 50% Fibonacci line at 245.10. We then had an extraordinary rally last week, ending up with a weekly key reversal up, which was not duplicated on any of the other grains directly. Hence, a pattern to treat with caution. The peak of the market was just short of the rising medium moving average, currently 300.10. But the bullish incentive, which had driven the market up there, had been damaged by the 50% Fibonacci resistance for 2022 at 283.70, plus the neckline, currently 284.80, of the head and shoulders top. Such the peak was made with an indecisive doji cross, which in turn was part of a 3-day bearish evening doji star pattern. Prices have followed on lower from this 3-day bearish pattern, halting only at the rising long moving average, currently 259.30. Then this week we had a reactionary move back up. Reactionary to the long moving average being tested, but the reaction was a sputtering, short-lived pullback up. And prices ended this week with a bearish open and close long black Mariposa, plus also being day 2 in a 2-day bearish kicking pattern. A rare, though not necessarily that strong a pattern. The action this week, on top of last week's moves, has set the stage for a new small bear flag, especially after closing back below the long moving average. Thus, we still have outstanding targets X2 and X1 below, and we can now add a potential target X3 in the 239 area for this new small bearish halfway hesitation, or bear flag if you like. The key to all these targets lower down is a reasonable test, followed by a breach, an ultimate breakdown through the 50% Fibonacci line at 245.10. Thank you for listening. This weekly broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.